Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to another episode of the AJ Brown Show. My name is Cyprian Francis, and with me, as always, is the dapper looking fresh today, AJ Brown. How's it going, AJ?
Looking good. Yeah, I figured today's show is going to be packed with information, so I thought I'd dress for the occasion.
Yeah, and you got a little bit of those Halloween colors there, a slight hint of orange there in the patterns.
Yeah.
I was feeling fairly festive myself, but looking at the markets, I feel like we've got a lot of data hitting us this week, a lot of earnings. This inflation data just came out. What are we taking in from everything that's coming out?
Well, first of all, last week, don't forget that there started to be some circulation of hype that the Fed was going to start taking it easy on us with interest rates, that their meeting that's happening next week is going to be not what we expected, which is a 75-point basis hike, that maybe they'll scale it back, or maybe they'll just wait and see. Because most economists know, and they've kind of convinced us as investors, that those Fed interest rate hikes don't take effect for like 3 to 6 months. And so maybe the Fed's going to take a break. But, I'm not sure if the data supports that. I was looking at the economic calendar, and maybe we should talk about some of the big headlines from this week.
Yeah, I feel like it's been a competition between earnings news, which is like really coming out all across the board, and then the economic data. So maybe we'll follow it up with what's happening with volatility.
Yeah. I mean, so with volatility, that's an interesting place. So for instance, this past week, we had some results from Google and Facebook, Meta, I should say, and Amazon. And, not quite as expected from those tech stocks, but the volatility is high. And so something to think about from that aspect when it comes to volatility plays is that options can play a really good hand at that. And so here's an idea for some of our traders and investors out there. If you've got an earnings play, and this is, a lot of folks have a kind of macro bias on different earnings plays. And what I mean by that is they have an idea of what is going to happen at earnings, that the stock will either bounce up or bounce down. Now, if you have a strong macro idea, like say, for instance, if we take a look at Amazon. So Amazon, if you have a strong idea going into earnings that Amazon's going to go down, if you're an options trader, you might look for some kind of back month put options to invest on it right before earnings, because puts will profit if the underlying symbol goes down. And if it's going to go up, if you've got some sort of macro understanding that at an earnings play that the symbol will go up, you would buy some back month call options. And what I mean by that is buying some call options perhaps 3 to 6 months out. And I'm not even so worried about the strike price of those back month options, but maybe a little bit like 1 or 2 segments deep in the money. But here's the idea with respect to volatility. When symbols are about to go to earnings, people get scared. And so what does that mean? It means that the implied volatility starts to go up like a day or two before. And then as soon as earnings release, no matter what the result is, the implied volatilities crash. And so if you want to kind of add to that macro trade, whether it be a kind of trade thinking that you're going to go down or a trade that you think is going to go up, what you can do is you can look at and this is going to involve the weekly options, SIP. Take some weekly options that are about 2 weeks to expiration. So If we're talking about October 28th, maybe we go out to like November 7th, November 14th, whatever the about 2 weeks out are. And you go ahead and sell that front month option, because that option is going to respond to that volatility crush. And you do that like a day before earnings is released, when implied volatilities are at their highest. And then the day after implied volatilities are at their highest, you go ahead and you buy that thing back. And when you buy it back, you're going to pay a lot less than what you sold it for. In other words, you're going to make a spread. And a lot of people have been doing that, and it's been helping their trade by about 5 to 10%. So in addition to getting it right with the direction, you get a 5% adder for also taking advantage of that front month kind of drop in volatility. So for some of our traders out there, if you want to do some earnings play, supercharge it by doing this front month kind of volatility play in addition.
And what's the technical term for this option setup? Is it some
It's a
sort
volatility
of
play. Well, so the technical term is that this is either a calendar or a diagonal spread, and you can either place it all at once or you can leg into it. I always like to leg into it. I like to get my back month options already established. The back month option is a typical macro play. So, you've got some understanding of the underlying symbol, and you're betting on earnings causing it to go one way or another. Then you just sell the respective front month option the day before earnings and then buy it back the day after earnings, and it'll kick your profits up by 5 to 10%.
Awesome. And this isn't a trade that your strategy takes into play that often, right? Because you're
earnings
set up
season.
Yeah. All right. So let's go ahead and bring it back to some of these economic data points, because I know that
Sure.
GDP is one of those things that tells us whether we're in a recession or not. So are
Absolutely.
we from the data?
No, GDP says we're resilient, right? Maybe when you factor out some of the more volatile pieces, but for the most part, GDP was positive. It wasn't super positive, but it was kind of still positive, but yet reserved, which gave people, at least in the beginning of Thursday's session, an ongoing belief that, hey, man, the Fed may take a break on us, which is like the big driver of what the market's doing. But today was the personal income and outlays report. And this has historically been the Federal Reserve's like go-to indicator. And I got to say, when you look at these numbers, the consensus was that inflation would have subsided by more than it did today. Of course, when you take away the more volatile food and fuel prices, it sort of did. Like they were expecting it to come in at 5.2. It actually came in at 5.1. But the very volatile food and fuel prices, the things that you hear people complaining about the most, I mean, those aspects of inflation are still kind of intense. We're waiting to see how the market kind of digests this. I mean, I'm looking over here at the SPX as it goes, and the SPX, if I get rid of some of the stuff off my screen, the SPX took the GDP information, and at first they were like, yeah, this is great information, but then throughout the day they sort of poo-pooed it. In fact, on Wednesday we got this bar pattern. What does this bar pattern look like to you, Sip? This one right here.
Is that a reverse hammerhead or something like that? Like
it could be a reverse hammerhead if you're talking about like candlestick patterns. I call it, and this is just kind of a Western take on it, a Lincoln's hat. And it's a doji pattern, which means we open pretty much where we closed, but we had these highs throughout the day. Investors started out highs, and then the bears came back and slapped the bulls upside the face and said, no, you're not doing that. And that's a type of bar that kind of hints that you're done at the current rally. Now, standalone, that bar doesn't mean much, but with other collaborating bars around it, like for instance, yesterday's bar after the GDP, we're wondering if this current little rally has any more legs to it. Now, today's PCE, again, it's still early times, and I think people are just confused. I think the big thing that's going to happen is next Wednesday, November 2nd, the Fed announces what they're doing next. And I think that's going to be the big driver of the market. Anything between now and then is just kind of like up down speculative movement about what are these folks going to do next.
Yeah, at least on the macro front, while we have these individual earnings stories coming out, along with just shifts in who's running companies, right? So like the other big news this week that keeps coming out is Elon Musk has officially taken over Twitter, right?
Yeah.
And I think we're pretty active Twitter users. And let me just pull up this. There's this image of him, or there's this video of him. Look at the smile on his face. He's just pulling into Twitter with a sync. I don't really understand what the sync part is doing there, but he's in there. He's in there helping rebuild.
Maybe he's throwing out everything but the kitchen sink. I don't know what the.
He did fire the CEO, the CFO, 2 or 3 of the executives, and then this is a headline this morning that I saw is that he's bringing in his Tesla engineers to look at the code. I mean, if you're going to rebuild something, I would say that's a pretty good start, is to go to the core product.
Yeah, he's Elon, right? And he's got a lot of. He's got his whole Musk Nation out there, his Tesla Nation, all of those different groups that he's built. I got to say, from an investor perspective, at least the way I invest, any play on Elon or any play on any of his ticker symbols, I mean, those are going, because he is so into the mainstream like news, like he's in front of people's faces, he's making headlines. It creates a lot of external stochastic shocks that affect the stock prices of his various players, even old players that he's not involved with anymore, like the whole PayPal and stuff like that. They're all affected by what Elon does, and that just makes me not want to be near them, because it becomes a very speculative play, right? And I like those more, where I can count on the patterns. I'm not going to worry about some, one minute it's like we're going to take Twitter and make it into a free for all. The next minute we're going to make Twitter, we're not going to let anybody say bad things. I mean, that just takes Twitter off of my hot list, right? Because it's going to go up and down.
Yeah, and I hear Donald Trump's making a comeback, so who knows what drama he's going to start.
Yeah.
All right. With that being said, we're going to go ahead and invite everybody to check out AJ's daily workshop. So if you're following along, watching, listening for the first time, and you want to kind of understand a little bit more of AJ's strategies and the things that the guys and the gals at the Trading Trainer weekly mastermind call are doing, I'm going to go ahead and throw this link into the chat. Head on in there. Join us. But with that, we're going to take a little break and we're going to come back. In the meantime, if you have any names that you want us to go over, throw them in the chat and we'll try and get to them. But we'll be right back, guys.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you, along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
All right, so the link to that is in the chat. All right, moving on with our headlines, or maybe not headlines, but there's a topic that you wanted to cover in regards to Shell. And so I had to look up, what's going on in the world of Shell gasoline, and just the oil market. And this week they reported profits of 9.45 billion, hiking up their dividend. And I mean, that's quite a lot of money these guys are making.
Yeah, and it's not just Shell. It's all across the board when you look at pretty much all of the big companies. But I wanted to point out, so Shell reported this quarter three about $9.5 billion in profit. This same exact time last year, they reported 4.5, I think. No, 4.13 billion in profit. So in the last year, their profits have shot up. And I've got a slide, so I'm going to put this up on the screen for you guys. And what it's basically showing, this is from the Bureau of Economic Analysis. This is showing the light blue is the average from 1979 to 2019. This is the average kind of growth in corporate profits every year, 11.4%. And then this is showing, the next bar is showing the non-labor input costs. So this is, how much raw materials have been increasing every year. And then the unit labor costs. This is how much you've been paying, for instance, for per, like, the amount that it costs to make that one object versus like overhead costs. So you can kind of see here, and then the dark blue represents 2020 to now, right? 2020 to 2021 quarter four. And kind of what you're seeing here is that these non-labor costs, these kind of fixed costs to running your company, went up a little bit in the last couple of years, but about the same number. But then check this out. The growth of the raw materials per unit, as well as what the workers who make that one unit of whatever you're selling, whether it's gasoline or whatever, hardly went up. It went up about 8%. But look at what corporate profits have done in just the last 2 years. In other words, corporations out there have been taking this kind of news about inflation in the raw labor costs, this kind of inflation that we're seeing here, and they've been using it as a opportunity to just raise prices to make higher profits. And so the big question is, in fact, Robert Reich, who is I got his quote up right in front of me. He is a economist, a lawyer, a professor. He now teaches at UC Berkeley, but he was a longtime professor at Harvard, and he's former Secretary of Labor for the United States. He said corporations are using inflation to justify price hikes. They're using the record profits that they're getting to buy back shares of their own stock and boost share prices. They're also using it to give higher dividends. That all benefits the investors, right? This amounts to an upward transfer of wealth from the wallets of working people into the pockets of CEOs and shareholders. So that was his quote. And we're seeing actual evidence this earnings season of exactly that, right? With Shell, not much has changed. I mean, in fact, you would expect, because in February, that whole Ukraine skirmish started, which kind of put a chokehold on raw costs of oil, you would think, that is why the price at the gas pump is so high. But it turns out Shell has increased the price of their fuel, and it's not to increase refinery capacity or all the other, drilling capacity. It's because they're using that money to buy back stocks, give out bigger dividends. And the question is this okay, right? Profit-driven inflation, is it okay? Should anything be done about it? And if yes, what? So what do you think, Sip?
I can't imagine that in our 2,000 years of history, we don't have examples of this occurring in the past, right? I imagine like the 1920s, there was some sort of a similar situation. And I think the only way that corrected itself was a massive collapse of the economic system, right? It's not like anybody did anything to fix it. It's just a lot of people lost a lot of money, and then I think the reality had to set in. But I think a lot of everyday folks would say increase taxes for corporations so that they can't make as much money. But I don't even think that's the solution. So I don't know what a solution or an idea here, but this data is definitely not good for millions of people. So, I mean, what do you think?
Well, and so I don't know either. I mean, the scoop is people are worried about their 401ks, right? People have been screaming that their 401ks are down. This is actually adding to 401k prices, right? So for instance, if a company funnels a whole bunch of money and either does stock buybacks or gives bigger dividends, I mean, that's the capitalist way. You're benefiting the investor, but they're taking advantage of the news headlines around inflation. And in order to do these things, to make their stock price higher, to boost things, they're, basically raising prices on the everyday Joe. Yeah, you're right. There have been calls to have some sort of like windfall tax on corporations that have, that get triggered on all of a sudden much higher profit taking than before. But, you know, I'm interested in what the viewers might think, right? Because that is what capitalism is all about. And it's just the extremes of the profit taking have just shown up in the last 2 years. And it's kind of everybody's complaining about inflation. And I don't know. Should the fiscal folks be penalizing corporations for increasing their profit margins at this time at the cost of unit prices?
However, one argument might be that if you're watching this show, you are an active investor. And so if companies are increasing dividends and stock prices are going up, then we, at least the smaller investors, can benefit from that growth, even in
Mhm.
smaller, accounts, things like that. And so that's why we do the show. That's why you have your course. That's why you're educating people on how to invest so that you aren't taken advantage of, because those are the realities. And so I would be a little bit more hurt, but I'm active. I'm trying to take advantage of things that are inflating, profits are growing, or vice versa.
And I got to show one more slide, and that is, the Federal Reserve. I know we come back to this often, Sip, but back in April, the Federal Reserve topped out at their balance sheet at about $8.965 trillion. And as of this last reporting, they're down at $8.743 trillion. That means they've sold over 200 billion. And that's about just around 4% of their target. They'd like to sell another 96% of their target. Their target is 4.5 trillion. And so they've sold off 200 billion, but that 200 billion has really affected stock prices. And so it's a question of, how is it all going to balance out? So in order for these companies, in order to deal with the fact that the Fed is overall pushing stock prices down, they're pushing their individual stock prices back up by increasing their profits and putting it back into stock buyback. So, I mean, maybe one side of the government is not talking to the other side of the government. I don't know.
I wouldn't be surprised by that one bit.
A
But
lot
that
of stuff going on.
That chart is looking a little like, it looks like they're starting to make an impact here, right? Like
Well,
if they go another.
This is 1 year, right? If we look at the overall picture, though, I mean, starting to make an impact, they got a long way to go, don't they? They're trying to bring it back, at least the targets that they've stated. They're trying to bring it back to about here. They're not bringing it back to the 2008 levels. That would probably crash the markets. But they are trying to bring it back to about here. And we'll see. This is what they had to do, immediately when all economies around the world shut down. This is what they had to do in order to keep people alive. And then they kept doing that just to keep people motivated. and now they're trying to elegantly pull this out. So even this is interesting. Even if they decide to take it easy on us next week with interest rates, I don't foresee them stopping on this bond selling, and that's going to be affecting investors big time. So that kind of everything is interrelated. That plays back into the question of the day: is should we be hampering corporations who are trying to, balance out this whole thing that the Fed is doing on another dimension?
What frustrates me about it all is like the price hikes on software. It's like how did the software development become more expensive, right? Like there's no raw goods. You already built it, right? You're just like
Yeah.
so
Or what was it about the Pfizer just announced on their COVID vaccine that they're going to hike the price of the COVID vaccine in a few months once it's no longer a government. The government's been purchasing vaccines at about a set price. I think it's been around something like $35 per shot the government was paying Pfizer, but Pfizer has made it known that they're going to raise the price once it becomes an individual thing for people here in the States to $130 a shot.
And now, yeah,
and it costs them $1.68 for the raw materials to make a per shot.
Yeah, that is ridiculous because it led to an entire shutdown of the entire world for quite some time, and now we want to 60x our returns on it, right?
The other argument of that is, Pfizer is on, using the same technology. They're on the brink within the next 5 years of being able to give us a vaccine against cancer. So they have to fund that crazy amount of research. So where are they going to get the money to do that research? And how much did all that research cost? It started that whole technology for COVID actually came from the whole 20 years of putting money into the HIV research. So maybe they're just trying to recoup their money.
I wouldn't be mad if they solved cancer with that money. I think that might be justified. But the one that frustrates me the most is the streamers, where not only do I pay monthly for the streaming, but now you're going to make me watch ads, and it's just like
it's true. It's
true. All
right.
Just a quick reminder for anyone. We did throw the link to the webinar into the chat there. So if you want to check out the webinar, but
dude, so many people have been watching that webinar in the last 10 days. People chat with me on Facebook Messenger who are watching that webinar, and I can't keep up with the number of chats that are happening. And not only that, at the end of that webinar, of course, there's a little bit of a opportunity. We give people a nice little discount onto our Trade With Us program. And that premium selling program has all of a sudden picked up in selling. I think folks have been looking at their 401ks. They've been looking at their investments where they kind of went a little crazy into the crypto markets, into some of their other markets, and they're seeing that their portfolios are shrinking again, and they want to have a level head and get involved with a more, reliable and consistent investment income, which is what our program teaches. That's all I can imagine is happening. But that webinar that we advertise, oh my gosh, it's gone like 4x in the number of views every month.
That's awesome to hear. And so if someone wants to even fast track their success even quicker, AJ also offers a one-on-one coaching program where we'll set you up with a program that fits your style, fits your portfolio. They'll break down some of the secrets that have been working over the past 18 plus years. And if you want to learn more, I'm going to go ahead and throw the link into the chat. When you go to the site, you can just schedule a free appointment with someone on the team. No one's going to waste your time. No one's going to try and hard sell you. It's really just an informational session to really learn what you can do as an investor, as a trader, to take advantage of potential windfalls in the market. And that's what options are great for.
Nobody is going to hard sell you, and I'll tell you why. It's because we've had so many people take us up on our coaching we have to be very selective because we only have a few spots left. So instead of hard pressing, it's more of like an application process. We're going to make sure that you're the right fit for our Trade With Us program, because otherwise, if you don't seem like you're the right person to be able to be in our community of investors, we'll just politely agree with you that maybe we should go our separate ways. So it's no pressure for sure. It's just feeling each other out.
And there's no harm in alternative ways of generating income. This is just one that happens to work very well for AJ and the members of the program. And if you're interested in learning more, go ahead and schedule a time to speak with somebody and they'll break it all down. Okay, let's get into the juicy stuff. Let's get into what's at play. What can we take advantage of? Let's go ahead and follow up from last week. We had a NIO set up. NIO is the electric vehicle competitor from China. So we had some setups, but I kept getting notifications of market drops. So what's going on in NIO, AJ?
Well, I wanted to follow up on NIO, and I'll show you guys my actual trade log here. And I got to do a shout out. We have a coaching client named Hank. Pretty cool dude. And Hank turned me on to NIO. He actually has been long in NIO, so he's been looking for a way to recover from that investment. But the scoop is he turned me on, and this is a classic income generating symbol. And just NIO is the electric car company from China. Their technology seems solid. Their business plan seems solid. But as with most stocks coming from China, especially with some of this macro news of Xi Jinping taking over for a long-term play as prime minister, and some of the stuff that's going on there, it's been hitting China stocks across the board, and NIO is not at all missing that. So here's the play, and I just wanted to feature it because this is what I did. So I didn't want to actually buy NIO stock. And so back in June, when we first started featuring NIO, instead of buying the stock, oh my gosh, my magic marker got all swollen. Let me get rid of that. I bought some NIO call options instead. And you'll notice that these NIO call options, they expire out in March of 2023. So they're far out in time, and they're pretty deep in the money. And I bought about 25 grand, just under 25 grand, 24 grand of these NIO call options, right? And then about 2 weeks later, on June 27th, and that was when NIO, so I bought it, June 14th, bought it right around here. So on this little dip that NIO was making. And then about 2 weeks later, NIO had spiked a little bit. And I said, well, this is a perfect time to take some income and set up some protection. So that's exactly what I did. So it took about 2 weeks, but on June 27th, I set up those income trades. I sold the NIO call options, and I bought some protection with some put options. And sure enough, I sold the July 15th options. When July 15th rolled around, those options expired worthless. So I got to keep all that income, $1.81 per share, or about $3,606. And then a few days later, actually more like 2 weeks later, I decided it was time to, I didn't need that insurance, that put protection anymore. And so I sold those back pretty much at a break even. You can see that it cost me $2,434 to insure this position. And when all was said and done, I sold those insurance options back for $2,466, kind of a break-even trade there. So I got to keep all of that income, and I was protected the whole time, and it didn't cost me any money to protect that. And then I was still left with those call options. So what does a good premium seller do? They wait for the good opportunity. It took about another 16 days. In other words, I'm doing managing of this trade about every 2 weeks, about twice a month. So on August 16th, I did the same thing again. On August 16th, I made another $4,486. I used some of that money, about $2,174, to protect it. But this time, fast forward to September 7th. On September 7th, I went ahead and sold that insurance back for $2,786. So this time, not only did I insure the trade during that period between August 16th and September 7th, but I also was able to sell the insurance back. So what I'm doing here is basically, and it's kind of neat, I'm buying insurance like you would buy insurance on your car. And I'm deciding how much of a deductible I need to have. In some cases, I might decide to pay more for the insurance up front and then have a low deductible. And in other cases, I might decide to have less insurance cost up front, but have a higher deductible. And that kind of explains the strike price that I'm choosing, as well as how much did I pay. But here's the difference between like an auto insurance policy and what I'm doing with the insurance with the options is that when I'm done and I don't need the car insurance anymore, there's actually a market to sell it back. And I'm selling it back either for how much I paid for it, or I'm selling it back for a slight profit. Now, you can't do that with auto insurance, but you can sure do it in the options market. And that's where my strategy shines. So I did that all over again. And then I did it a third time on September 16th. And here's what happened. Let's take a look. And this is another neat thing about the way I teach this, SIP, is on September 16th, which was around here, was the perfect time for me to go ahead and buy some of that insurance, sell some of that premium. And then look what happened to NIO, right? NIO started to break out down. In fact, I had this beautiful channel described about how I thought NIO was trading in a sideways channel. And it got to the point where it was about 40% below the channel. And that gave me a hint that, hey, NIO is no longer in that channel where I can make monthly income off of it by just doing a couple trades a month. Instead, NIO is trending down. And that's what's so cool about my position. My position auto-adjusted, meaning I didn't have to do anything to it. What happened is those NIO calls got stopped out. And they did get stopped out. If you look, I paid $12 for them. They got stopped out at $9.45. And you might say, oh, man, you took a beating on that. But I had those protective puts in place. In fact, I had those protective puts in place from September 16th all the way up until Wednesday. So that protective put took advantage of this whole downturn. And because I got stopped out, they weren't protective puts anymore. They were actually puts. In other words, this trade auto-adjusted from an income trade to now a trade that took advantage of this downturn. Those puts that I bought for $1.18 a piece, I wound up selling them back at $4.82. So when all was said and done, even though NIO took a bath in the last month and a half, and you would think that would decimate me as an investor, I walked away with 40% ROI, 39.9% ROI on the initial amount I invested. I invested $24,114, and I walked away with $9,626 of profit. And my battery's running low. Hold on one second. Yeah, I forgot to plug in my computer. Give me 1 second.
All right. We're going to go ahead and give AJ a second here to get his computer pulled up. Yeah, I guess I'll put up my screen and see what we got going on in NIO fundamentally, because why not? And it's not looking good. So that protective put was very spot on. Oh, AJ's back. There we go.
Yeah, that's the bennies of broadcasting live.
It's all right. It was like a 30-second cut, but I think the moral of the story here is that you use the option to hedge your position and, you know, lessen or find a way to also profit but protect yourself and work the trade. And when did you get in on that? June? So since June you've just been working it?
Yeah, I've been working it, but people will say, "Man, that seems like a lot of work." No, when you look at the dates, I've only been visiting this trade once every 2 weeks. I haven't been like day trading or doing a lot of effort. Some of these trades, like these ones that I put asterisks buys, these are automatic stop loss or positions expiring worthless. In other words, the trades happened without my intervention. So really, I started the position on June 14th. I came in on June 27th and managed it. I came in again on July 29th and managed it. August 16th, I managed it. September 7th. September 16th, September 29, and then October 26th. So I basically came in over the last 4 months, 1, 2, 3, 4, 5, 6, 7, 8. That's not day trading. In the last 4 months, I did basically one trade, 2 trades every month.
All right,
and I'm able to pull out 40% ROI on a symbol that obviously, if you traded it any other way, you would have been decimated. Your portfolio would have gone to zero. And instead, my strategies that auto adjust, and it's just like you said, man, the insurance, if you never use the insurance, the beauty thing, different than like what we were talking about comparing it to auto insurance. If you never use your auto insurance, imagine if when you were like close to being done with the year that you had your auto insurance, you could sell it back at a profit. So if we never use our insurance trades, the beauty thing about the options is that we're able to, if we select it right and time it right on the buying side, we can sell this insurance back at a profit. But if we do need it, the whole position auto adjusts and the insurance winds up becoming like our saving, part of the position.
If only we could sell back our insurance at a profit, right? Wouldn't that be a great world?
But I totally wanted to feature this NEO because we had talked about quite a few shows ago, giving people a heads up on NEO. And man, what a wonderful trade that turned out to be. Like low maintenance. I mean, being able to go in and just do like a little something every 2 weeks and have it, benefit this way. This is what our type of investing is all about.
And with that, let's go ahead and move on to the second position that you're looking at, your pick of the week, basically, and that's Canopy Growth Corporation, which I believe the ticker symbol is CGC.
CGC. I think I put in our notes CRC, but it's CGC. I just wanted to feature this one because a lot of people have been asking me about, cannabis plays. And this is a great company. They're out of Canada, of course, but they're being traded publicly. And they're all about the weed, right? And so the scoop is this is a good candidate for us to be thinking about selling premium on. It's in that sideways pattern. And so I wanted to feature it because it's actually given me a signal to consider either buying some of the stock, and it's cheap enough, and it's got an option chain that's trading every 50 cents. So there's granularity in the option chain. There's open interest. People are trading it. The bid-ask spread is super small, which tells us there's a lot of activity, not just on the stock. It's affordable by anybody. I mean, it's $3 a share right now. That's like nothing. And so I do recommend, for those of you that want to somehow get into the weed type of business without actually getting in and touching your hands on the weed, this might be a stock to follow. They are reporting earnings November 9th. So that's in about 2 weeks, a little less than 2 weeks. But maybe you want to do some speculative paper trading or even, do some paper trading on it. See if it would work for you. That's what I'm going to be doing. And I just wanted to feature it very quickly.
Awesome. Yeah. We encourage investing of weed, not selling of the illegal activity, which I believe is still considered, quite dangerous in a number of the states in the United, in America. So,
and even if the states are there's still a law on the federal books here in the United States that says weed is no bueno, even if some of the states have voted against it. And so, depending on who's in charge, I think the current administration said just ignore the federal law, don't try to, but the law still exists. And so, if a future change in power here in the states says something about weed, then all these things that are happening on the local levels could totally be wiped out.
Yeah, and I'm just looking real quick at the analyst targets on this. The low is $2, the high is $10. So there's not much room.
Upside potential.
There's definitely some upside potential. So I might have to get in on this one myself. Okay, let's go to our speed round and run through some of the names that members, viewers have called out this week. And we'll go ahead and start with Chris from Yonkers, New York, who's interested in Party City, ticker symbol PRTY.
All right, Chris. Okay, again, earnings. So I talked about in the beginning of this show about a potential earnings play. Chris, if you have first of all, let me applaud you for also finding a low-priced underlying symbol. That means that this trade is going to be accessible to a lot of us, right? Because some of us with smaller portfolios, even portfolios under $1,000, can be doing these type of trades. So if you've got a bias, Chris, on what Party City is going to do after earnings, it looks like sometimes they take a big beating or the investors have a big move. Other times investors ignore it. So if you've got some sort of macro bias, you might consider doing that volatility play that we talked about in the beginning of the show. Otherwise, I've got two tests of support. 1, 2. I'd like to see if there's a test around $2.25, $2.50 for resistance. But this could be one that I could turn into a premium trade, an income producing trade. And so I just got to watch that. That doesn't mean I have to wait to do any of my position planning. I can go ahead and do that based on what I've seen to date. And that would give me a time to get kind of past this earnings. If I'm going to try to do an earnings play, do that separately. But I see the potential. Let's do one last thing, and that is let's make sure that the option chain can handle us. And so I'm looking at the December. Let's also look at the November. These options are trading every every 50 cents. So again, the granularity is there. Bid-ask spread, it's not as good as what we saw on the cannabis stock, but it is pretty good after all. So that's nice. I think that the option chain is there. And so if you've got an earnings play in mind, see if you can supercharge it with that volatility component that I talked about. Otherwise, let's start to prepare for an income generating trade.
Yeah, I'm just glancing real quick, and I'm surprised they do $2 billion in sales every quarter. Like, to me, that's a fairly shocking number.
And I think Halloween is their big holiday because I think they book a whole bunch of costumes.
Well, I was looking for one last night, and I saw a line around the corner. So yeah, it's definitely the peak of traffic for them, I would assume. Okay. Let's go ahead and move on to our next speed round pick. And this is from Dan in Newton, Massachusetts.
Outside of
Boston. He's interested in Ginkgo Bioworks, ticker symbol DNA. What an awesome ticker symbol there.
Yeah. Okay. So this is a company that's made kind of a platform, I think, that a lot of the other companies that do biotech work, they can base it off of. And look at that pattern. I mean, I like that. What was the gentleman's name?
This is Dan.
Dan, I think you found a good. Oh my gosh. This is the week of low price symbols. So that makes me want to jump over to the options chain and see what we've got for liquidity. Not bad. 5 cents bid ask spread. Lots of open interest on the call side. And that's, of course, the near-term option. Let's look at, for instance, the March option. 50 cent increments, 10-cent. Yeah. So there's a lot that there's a healthy options market, and this thing's been trading sideways. Let me go back. This is just a 6-month chart. Let me go back 2 years. So it's been trading sideways since about March. I think that you've got an income trade. And again, what I like is we have an options chain that can support this low price. We're trading every 50 cents, which is perfect for setting up your premium trades. You could turn this into a real income producer. And I want to just give all of our users a heads up. This is priced well for even people with small portfolios. And if you've got big portfolios, you're just going to buy a lot of shares. Yeah, I like, and I'm looking at my Fast MACD, which is one of my favorite ways to get signals to do the premium trades, and the Fast MACD looks really healthy. I think that you've got something here. So again, you guys are finding symbols that I don't have in my hot list, but boy, I think I'm going to prepare some trade plans on these and see how they work out, even if it's just in a simulator trade.
Yeah, and it's currently trading below the lowest analyst targets of $3 with a high of 14. So I think this is a great setup for anybody with a small account that wants to get into this type of, trading or investing.
Absolutely.
All right, let's go ahead and move on to our next pick, and this is Sunish from Milpitas. I don't know if I said that right.
Milpitas. That's in Silicon Valley.
Milpitas, California, which I believe this is where the company's from. And this is Zoom, our favorite screen sharing software of the COVID era, ticker symbol ZM.
Okay. So
not so many people are Zooming anymore, right?
That's what it looks like as of their last earnings. So traders ignored earnings back in May, but this last earnings, but look, their earnings are so uber positive. I mean, $1.03 a share, $1.05 share. I guess people just expected it to be more instead of just a few pennies more, and so they kind of slighted it. But let me go back. I want to see what 2 years of this stock look like. So yeah, Zoom, as the pandemic was winding down, people were using it probably less and less. But it seems to have figured out where its floor is. So now it is a sideways generating stock. I'm going to come back in more to a more current. Here's what I'd want to see before I sold any sort of premium on Zoom. I'd like to see it actually establish. It looks like it's trying to establish resistance right now at about $85 and support at, I'd like to see support tested again. The other thing is Zoom might be a good long-term play, meaning you might want to have Zoom stock, depending on how you look at the company. You might want to have this in your portfolio for the long term. So another idea besides just getting it, observing it for when it would be a good premium trade, a trade that would create income for you, is if you want to have some Zoom in your portfolio for the long term, we could start doing some naked puts, selling some naked puts. Naked puts are a fantastic way to guarantee the price that you pay for a symbol. So say, for instance, I start selling naked puts at $75 strike prices, and you want to go, every time you do this, you want to go from about 2 weeks to expiration to as much as 5 weeks, but not more than 5 weeks. And so you sell these $75 puts and you make some money, and you have to make sure you're ready to buy the stock at $75. And then one of two things is going to happen. The expiration date of that option is going to come, and either on that expiration date, you're going to get to buy the stock at $75, which means somebody is going to exercise that option. And so the commitment you get into is that you'll pay $75. Otherwise, the option just expires worthless, and you get to keep the amount of money that they gave you to sell that option in the first place, and you just keep doing that. And so by selling naked puts, we actually lock in. There's no guessing about what price you're going to get. You're going to get that $75 buy price Otherwise, you're going to get to make like a few dollars here and there per share. And you can do that as often as you want. You can say, I'm just going to keep selling $75 puts every 2 weeks. And if I wind up having to buy the stock at $75, that's a great price. Otherwise, just keep paying me these little, wages for trying to lock in the price. Options give us so much flexibility. It's like mind blowing.
All right. We thank you for that, Sunish. We got 3 very cheap stocks and Zoom, which is a little bit on the higher end.
It's a little bit expensive.
But keep on bringing those in. We appreciate it every week. And we've got, kind of a not non-technical question from one of our viewers. And it's one that I think many of the new viewers might be asking themselves, or someone who's interested in getting involved. And that's basically, what is the difference between a trader and investor?
I mean, there's a lot of overlap, but a trader typically is focused on individual trades in my mind, whereas an investor has their money and they want to put it in a place for growth. And I know that sounds, here's a perfect example. I'm going to just bring us right back to this NEO trade that I did. I consider this an investment, right? I put in $24,000 into this investment, and I did. It's what I call an active investment. I did have to do something to it every 2 weeks, but what it wound up being done, this investment wound up being completely turned back into cash 4 months later. I wound up walking away with a 40% ROI. So investors kind of think about, I want to take this chunk of money, I want to invest it somehow and have it grow. Whereas traders, in my mind, what they like to do is they like to go ahead and focus on an individual like trade, do the trade and see if they can win or lose at that trade. So it's really a mindset thing. Are you like being an active trader, or are you being an active investor? Investors, I think, like to have low amount of effort and low amount of maybe emotional ups and downs compared to traders, and still get good returns on their investments. Whereas I think traders are in it for more of like the game, right? I'm going to trade and I expect to be on this roller coaster. It's almost like traders is almost synonymous with, kind of somebody who would be in Las Vegas casinos, gamblers, I guess you could say.
Yeah, the odds are faster than, when you're investing. But I like the layer that you mentioned of investing, active investing, and having to tweak a trade every 2 weeks or so. You're not a trader. You're definitely more of an investor.
I'm an investor who manages his portfolio. I feel like what I teach our folks, and I think that's why all of a sudden we're seeing all this excitement, Sip. But I think I teach people how to build a fund that they can invest in, and this fund does really, really well.
All right. Well, we appreciate that question. It looks like we're running low on time here for our Halloween special AJ Brown show. it is Halloween weekend. I assume you're one of the good candy houses. Am I right?
Yeah, my wife's, and actually she's already been like dipping into the candy. Every once in a while, I see her with like chocolate around her lips from the Reese's peanut butter cups and stuff. So I know we've got it, and we try to do our clients well when they come to our door.
Yeah. So all the young viewers in the Washington D.C. area, keep an eye out for AJ's massive candy giveaways. But also in your household, it's Halloween is kind of going to be a special time, because not only are you celebrating the scary, but it's also your daughter's first birthday. So congratulations.
It's her first birthday. I think that she's got a unicorn costume for this year. The wife runs a lot of that stuff for us, but I think she's going to be dressed as a unicorn this year on her birthday.
And you have a costume?
Yeah, no. Yeah, sure. I dress up as me, which is scary enough.
Yeah, I don't have one, but I think this might be a last. It's usually every year. It's like within the last 5 hours, I figure it out.
Yeah.
All right.
Yeah.
So
yeah.
Thank you, AJ, for your time. Thank you, everybody, for tuning in. If you've enjoyed the broadcast, hit that like, hit that follow, hit that subscribe button. If you're interested in joining the community, the links are in the chat. Feel free to hit us with the DM if you have any questions. Go ahead and schedule your appointment with for the one-on-one coaching. Get some more insight. And if anything comes up throughout the week, feel free to send us a message. We'll see if we can review it on the show. AJ, any final words?
Have a happy Halloween. Be safe out there.
All right, everyone. Enjoy your Halloween. We'll see you next week. Adios.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.